Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update on Arizona Sonoran copper. Arizona Sonoran is traded on the TSX under the ticker ASCU and on the OTCQX under the ticker ASCUF. And we're joined today with the president and CEO of Arizona Sonoran Copper, George Ogilvie. And George, always great to get you on the show to get an update. We were remarking off mic, it's been too long, man. It's been over 6 months, so there's been a lot of
Mm.
news out, a lot to catch people up with on this story. And I think one of the more interesting copper plays in the U.S. The big catalyst coming up for the company is going to be the pre-feasibility study. This is the next set of economics that you're going to wrap around it with improved metallurgical work, engineering. The last time we talked was really about the PEA. So maybe talk to us about some of the key initiatives, some of the key work the team has been doing as you build towards this PFS.
Yeah, pleasure, Shad, and thanks for having me back. Yeah, so one of the big opportunities we're looking at is the opening centroid position for the starter pit at Park-Salyer. In the PEA, we'd started it all the way in the south, where the mineralization comes within 42 meters of surface. And then over a period of many, many years, the open pit would advance to the north. What we see within the PEA is that in years 5 and 6, when the pit sort of crosses into the original Park-Salyer, the grades in that area are in excess of 1% copper. So we see spikes in production and very robust free cash flow in years 5 and 6, which obviously has very good, strong fundamentals for the economics and the financial model. So one of the things we're looking at is moving the starting position of the open pit slightly more to the north. It will increase the pre-strip and therefore the upfront capital over and above what we had in the PEA. However, if it brings forward the improved grades and therefore production and free cash flow by, let's say, 12 to 18 months, we believe the net impact will be positive to the economics within the PFS when compared to the PEA. The other added benefit that we may have there is several weeks ago, we put out some infill drilling results at Park-Salyer, and we're actually seeing the high-grade core at Park-Salyer migrate slightly to the south. So if we get the benefit of moving the starter position of the open pit to the north, and at the same time the high-grade core is moving to the south, it should bring further forward those cash flows with higher grade and more metal production, giving us a double benefit, from those couple of areas. So we're exploring that within the PFS, which is due in the fall of this year.
George, what sort of drilling needs to go into this? You've announced that you will do, I believe, around 40,000 meters of infill drilling at Park-Salyer and Cactus West. Why is this important? Even tying in some of the recent drill results that, again, continue to be very good drill results. February 25th, there was 391 meters at 0.74% total copper. What do we need to pay attention to for the drilling that'll happen this year?
Well, you're quite right. Yeah, we announced that we would be doing just over 40,000 meters of infill drilling. We're targeting the inferred resource to move it up into the indicated category. And of course, only measured and indicated can be used in a pre-feasibility study to convert over to mineable reserves, both in the proven and probable category. So I think you're going to see more of the same. The infill drilling, we're getting very good conversions of inferred to M&I, which puts us in a very good position for converting that eventual M&I resource over into reserves.
Well, George, I think it would be helpful just to remind people listening that maybe haven't kept up with the story that when you added in the MainSpring land, that was some land where you had some historic work that was done by prior operators. You've done a lot of drilling there. That's now incorporated into the larger Park-Salyer project, but it's also really revolutionized the way you're looking at mining this project. Like you say, you're now looking at moving the center of the pit a little bit closer to the high grade area in Park-Salyer, but MainSpring is really becoming a juggernaut, and a lot of this infill drilling has been in this area, and it also shows how much longer the mine life has been added now, and it's changed the whole mining method. So maybe just talk about the importance of MainSpring as far as how it's come into the overall Park-Salyer project.
Yeah, well, look, it's a great question. It's obviously been hugely transformational for the project. Prior to acquiring MainSpring, when we were looking at the Park-Salyer deposit itself, because the top of the mineralization was, 300 meters below surface, it wasn't open pittable at that point in time. So we had to access it via declines and go into an underground sublevel cave mining. With the acquisition of MainSpring, which is all on private land, and obviously seeing that MainSpring essentially is the up plunge extension of Park-Salyer, which is now a kilometer to the south and comes within 42 meters of surface, we're now able to mine MainSpring as an open pit. And as we advance the north pit wall face to the north, the mineralization gradually plunges and brings us into the original Park-Salyer, but now we can mine it as an open pit. So with open pit mining, the operating costs are substantially less than underground mining. That means we can lower our cutoff grades, and that means more mineralization can therefore come into the mine plan that's going to be economically viable. And of course, open pit mining, just from a pure execution perspective, is a lot easier than obviously underground mining, which carries a hell of a lot more risk. So for those very reasons, it's allowed us to significantly increase the production profile. And now at Park-Salyer, which is inclusive of MainSpring now, we're looking at a 20-year mine life there alone. There is some overlap with the current Cactus West, which we envisage starting up in and around sort of year 9, and that would carry the production profile along with Cactus East and the current surface stockpiles that we have, which were a remnant from the ASCU mining in the 70s and 80s. That would carry the production beyond year 20 out into year 30 based on the current PEA. So you're really looking at an asset now that has, got some size and scale to it and really will be a generational mine.
So, George, it's clear that you're moving forward with, I guess, de-risking this project more into a development play. That brings up the question of what's the timeline and what sort of funding avenues are you going to pursue and when do you need to pursue those? Earlier this year, you had Hudbay come in as a strategic investor. That gave a lot of investors confidence that you did have a major on board with this asset, but give us a lay of the land of what it looks like to de-risk this from a funding perspective.
Yeah, well, look, from a funding perspective, my CFO is currently working on an exercise right now where we're interviewing potential project financial advisors. We would hope to take our recommendation to the board in the very near future. And then, assuming the board accepted management's recommendation, we would engage a project financial advisor. At some juncture in the summer, with all the infill drilling completed, we will put out an updated mineral resource estimate, and then that will lead into a pre-feasibility study in the fall of this year. And then from that, we'll then launch into a bankable definitive feasibility study that's going to take about 9 to 12 months to complete. And that would come to the market sometime in the second half of 2026. So essentially from the end of the second quarter of this year through to the delivery of the bankable feasibility study, we want to bring various groups into our data room under NDA who could potentially assist with project financing, particularly on the debt side. So some of those groups could be the ECAs like an EDC or a US EXIM or a KFW. We've also had some of the commercial banks that still lend in our space reach out to us and look for updates on the project. And of course, ultimately, at the end of the day, we're going to be producing a copper cathode, which is not going to leave the shores of the US. When this cathode is produced, it is 99.99% pure, and therefore it can be sold right into US manufacturing for the manufacturing of copper wire, which can go into, electrical harnesses and electrical vehicles. It can go into overhead electricity lines. It can go into the manufacturing of copper rods, which goes into refrigeration systems, etc., etc. So this is going to be highly, highly prized commodity here in the next couple of years. So off-takers would be interested in this. And then interestingly, when we picked up the MainSpring property, which really forms the foundation of our first sort of 5 to 7 years of the mine plan, there is no royalty associated with that. And viewers or listeners who follow the story may have also seen that we've actually bought back a 1% NSR on this project earlier this year. And the reason why we're doing that is we'd rather longer term put the money in the shareholders' pocket, but there could also be opportunities down the line where royalties can be renegotiated, and that might be also a source of potential project financing for us, along with all of these other items that I've also mentioned. I don't think this project, given its location and given its copper cathode for US domestic consumption, is going to have any issues in seeing project financing.
Yeah, George, that's a lot of information in there that I think is important for people. Just to reiterate that there's no royalty on the MainSpring property that you added into Park-Salyer. You bought back a 1% royalty on the Bronco Creek, which is over some of that high-grade area in the Park-Salyer deposit. And then I also think it's worth mentioning that Royal Gold came in and purchased an existing NSR on the Cactus Project, showing one of the largest royalty companies seeing the value in the project. So a lot of interesting things going on just with the royalty side, but like you say, that frees up some of the potential negotiating you can do on the capital stack when the time is right. I want to circle back to what you also brought up in there, though, George, that this is a cathode project. And so instead of it being a concentrate that's shipped to Asia that would be subject to the tariffs, you're keeping everything domestic and keeping it from going overseas by doing the cathode production. Could you maybe just give people that are not familiar with copper a little bit more information on that doing the cathode versus the concentrate, and maybe just speak to the experience your team has in-house with that bench strength?
Yeah. Well, look, at the moment, 50% plus of the copper that's produced in the world is actually in the form of a concentrate. And over the last several decades, smelters, particularly in the westernized world, have gradually been closing because the environmental standards are so high that they just can't remain open. So Asia, in particular China, has stepped into the fore here, and most of the world's smelting capacity sits in Asia and particularly China. So a lot of the copper that gets produced around the world in concentrate goes off to China, where it's then further smelted and then refined into finished product. And then it goes into the various goods that are sold back to the West, or it goes into the strategic reserves of the Chinese Communist government. The beauty of this product is it doesn't have to go offshore for further refinement. It's already a finished product. And at the moment in the US, depending on whose numbers you look at, the US currently uses about 1.2 million tons of refined copper on an annual basis based on the current demand today. Now, only 60% of that is actually fed from within the country, and the other 40%, which is close to 500 million tons, is currently imported into the United States. So with tariffs coming into place, as we can see what's happening is, the traders are physically moving the metal into the COMEX ahead of potential tariffs. And that's why there's currently an arbitrage, or you're paying a premium for copper purchased on the COMEX versus the LME or Shanghai or other warehouses around the world. That'll probably unwind in the second half of this year, but the US is going to have a problem, and that it needs over time to make up today 500,000 tons of copper production. And obviously Arizona Sonoran coming into production in the next 3 to 4 years and producing 100,000 tons of cathode a year for the first 20 years of the mine life is going to be a hugely, hugely prized asset. And that demand is only based on today. Think about all the exponential demand we're going to see as economies in the US has to upgrade its grid system. It gradually moves towards more wind, solar, more electrical vehicles. Think about the data centers required and for artificial intelligence and all the electricity required for those operating units. It's going to require a lot more copper than the demand we see today. So that's going to put further pressure on the supply side. And I think this is great news for the Arizona Sonora shareholders, given we've got an asset with the right commodity and the right jurisdiction moving into production here in the next couple of years.
What does all this mean for permitting then, George? We keep hearing out of the White House that they're trying to shorten permitting timelines, but it also sounds like they're trying to push more of the permitting onto the local governments. Where does Arizona Sonoran stand in terms of permitting? What key permits do you need? And have you noticed any speeding up on the government's front on the permitting side?
Well, what the US federal government is advocating now, pushing the permitting onto the local municipality and the state regulators, that's the situation that Arizona Sonoran has actually been in since we acquired this project in 2020, because all of the land that we control is private land and there's no federal nexus. So for us, it doesn't really change our timelines, and we're already in a very fortunate and unique situation. But it obviously will help other projects that have exposure to federal agencies, such as the Bureau of Land Management, for example. So that's good news for us. As the project has evolved over the last several years, as the listeners will know, we've gradually amended various permits, including the Aquifer Protection Permit and the Industrial Air Permit. Those permits will have to be further amended on the back of the Pre-Feasibility Study that'll come out in the fall. And the way it works is in the fourth quarter of this year, we will apply for amendments to the Aquifer Protection Permit, the Industrial Air Permit, and the Mined Land Reclamation Permit, which is tied into the bonding and the remediation of the project. Now, with no federal nexus, once we make those applications, once the application is administratively accepted, and it can take several weeks or even a couple of months to have an application administratively accepted, but once it is, it starts a clock ticking. And within a 6-month window, the regulator must give you a response to your permit. So we would anticipate early in 2026, the applications would be administratively accepted. And if we play that timeline forward, you can see by the summer or the third quarter of 2026, we would be in possession of our final amended permits. And that's at that point in time where we would be delivering the bankable feasibility study, and we would have gone through the project financing exercise that I described in the past. So as we're about to announce the BFS, we'd be announcing project financing is in place, which then gives us a final investment decision. And of course, if we can break ground before the end of 2026, we can see first copper cathode here before the end of 2028, which is a relatively short period of time for bringing a copper mine into production.
Well, George, I think we'll wrap it up there with that timeline. That's a very exciting path forward for the company, not just this year with the PFS, but building towards the bankable feasibility study next year at the same time that the permitting should be lining up, at the same time that the capital stack should be lining up. So a very exciting window of time here over the next 2 years for Arizona Sonoran Copper. And for those that are listening in, if you want to follow along with all the news flow from Arizona Sonoran Copper, definitely click on the link below in the show notes. It takes you right over to the website, straight to their news section. If you have any questions for George, send those in to us. But George, great to have you on the show as always, and looking forward to our next conversation.
Thank you, Shad. Thank you, Corey.